All right, folks, it's Friday, February 28th, last day of the month. Wild scene at the White House today in the Oval Office. Trump, Zelensky, J.D. Vance. What a scene that was. It was wild. Let me tell you something. I don't know what you thought of it. I just thought it was crazy. Like Zelensky, this character, man, like unbelievable. Just going around, demanding money, demanding arms, shaming the world into, being on his side if they're not providing what he wants. Trump and Vance dressing him down today big time. Trump got pissed off, and the deal supposedly that was supposed to lock in all these rare earth metals and everything else and commodities and minerals, that fell apart, and Zelensky was summarily kicked out of the White House. Man, it was unbelievable. Anyway, I don't want to spend my time on geopolitics. I just thought that was wild, a wild scene. I mean, I was like riveted. I'm sure if you were watching it, I was riveted to the screen. Like it was unbelievable. It really, really was incredible to watch. And even Trump said this is going to be great TV. Man, was it great TV. Anyway, and I'm surprised, like we had the market rally sharply. Folks, the market was way, way oversold. If you look at the sentiment indicators, extreme bearish sentiment. So a bounce was coming. I sent out an email to my subscribers this morning, actually yesterday too, saying that it's way, way oversold and expect a bounce. And actually, looking at the fiscal flows, I mean, they're really strong. They're really strong. I mean, if I look at those things and cut out the noise of the market and the headlines, which is what I always tell you guys to do, but sometimes it's hard because, we get caught up in the emotion just like everybody else. But if I look at, my compass, which is the fiscal flows, I could easily say that this thing could go to back to the highs. The only thing I would have to mention is the fact that we're going to have tax strain, pretty significant tax strain coming in April and then followed up in May. Okay, and then I think there's another one for the LA fires where there was a tax extension. I don't know when that one is supposed to hit. So the economy kind of had a bunch of you can call them tax cuts. These extensions are the fiscal equivalent of short-term tax cuts. So, we've had that very strong stock market, decent economy, although I'm going to talk about that in a second. And but all those temporary tax cuts, again, those are extensions, but I'm saying from a fiscal point of view, it's the equivalent of a tax cut, short-term tax cut. Those are going to be taken away, successively in April, May, and whenever the LA fires extension is until. I don't know when that is, but somebody told me about that. Today we had there's a lot I got to talk about here, and maybe it's really something more for 2 videos, but today we had the Atlanta Fed come out with their GDP now forecast for the first quarter, and it plunged to a negative 1.5% GDP. Plunged to a negative. So negative growth, contraction based on their forecast. And there were 2 elements in that. One was a sharp drop in net exports. So in other words, the negative contribution from net exports, right? Because that's always negative anyway, because the U.S. runs trade deficit, so it's exports minus imports. It's going to be a negative number. That subtraction got much bigger, and probably because imports were huge, exports were small, and imports were huge. The speculation is that was firms, businesses front-running the tariffs. In other words, they're ordering everything now ahead of when the tariffs are going to hit. That's totally understandable. If that's the case, then basically it should be a one-time thing. It should be a one-off. The other thing was a sharp drop in retail sales in January. That was the fall off from the holiday season, and maybe also student loans kicking in again. Okay, the moratorium on student loans, I think that ended in January. And so that is reducing disposable income because students have to pay their loans back now under Biden. That was suspended. All right. So that might be a factor right there. Anyway, GDP now forecast to be negative 1.5% in the first quarter. And I've always said to you guys, stocks follow the economy. Stocks follow the economy, not the other way around. All right, I've always said this is why I focus on the macro picture. It's why I focus on what the economy is going to do first before anything else. And then I can strategize as to what my investment portfolio is going to look like, how I'm going to be positioned. Am I going to be positioned, in a bullish way, in a bearish way? And under those conditions, where am I going to position myself? Okay, if it's bullish, are there sectors I want to be in? If it's bearish, are there sectors I want to be in? In that case, what about currency? What about commodities, etc.? Gold down. I told you guys that in an economic recession and an economic downturn, gold is not going to be your friend. I kept saying this. I've been saying this for years and years and years. Gold basically is an industrial metal. It got a significant boost over the last, 3 years since the Russia invasion of Ukraine. It got a significant boost from central bank buying. And I've been saying that supply that is now being held or claimed by central banks, that's going to be leased out. Those central banks enter into gold leases to earn an interest rate on their gold holdings. So that where that was demand from the central banks and it pushed the price up, eventually that's going to end up being supply on the market as it's leased out. And that could cause the gold price to languish, to stay low and not do very much for a pretty long period of time. I mean, it happened, I'll tell you what, it happened after the big gold boom, from the 70s into the 80s. And then, gold corrected big time and stayed flat for for 15 years or something. I used to trade gold in the pits on the COMEX. And every time there was the slightest little rally, you'd have the bullion dealers, the gold dealers, they would just sell and sell and sell. And gold stayed at $250 an ounce for more than a decade. I'm not saying it's going to go to $250 an ounce now. It's not. But it could see a significant price correction from where it is now. And it could kind of languish at a lower price level for years as central banks just, keep the pressure on the market through these gold leases. All right, so I covered that. I covered the economic contraction. I want to talk a little bit about, I'm going to use this as a topic to discuss an MMT point or an MMT understanding. It's not even really MMT, it's just accounting, okay? And that is these golden visas that Trump has come up with the help of Howard Lutnick, the Commerce Secretary, and Scott Bessent, who is the Treasury Secretary. You probably heard or read about these things. I think I spoke about it. Trump is saying, if you're a wealthy person outside the United States, you can get access, you can get a visa to the United States if you pay $5 million. And then eventually I think that's going to lead to a residency visa and maybe at some point down the road, citizenship. And again, the reason why he's doing this and the reason why this is being pushed, and this supposedly was an idea that came from the brilliant mind of Howard Lutnick. And I could do a whole video on Howard Lutnick. Not that I know really anything about this guy, but he strikes me as one of these guys, like, how did he even get in that position to be the head of Cantor Fitzgerald? I mean, he kind of seems to me like he's there because he's a good schmoozer. You know, he gets to know people. He knows the right people. He doesn't strike me necessarily as some brilliant guy. Nobody's ever spoken about him that I know of, and I've been in the trading community for over 40 years. I've been a member of 4 exchanges. I used to know guys who worked at Cantor. I knew bond traders both in New York and in Chicago. Nobody ever really mentioned Howard Cantor as this, you know, genius bond trader who took control of Cantor Fitzgerald. I mean, anyway, I digress. I don't want to get into this right now. But anyway, it was his idea and Bessent's idea. But here's what I want to talk about. And this encompasses, or it's part of this whole idea of we got to reduce the debt. Treasuries, U.S. Treasuries are dollars. Cash reserves in the banking system are dollars. Treasuries are just another form of dollars. So when you're taking dollars from somewhere, doesn't matter if it's a foreign citizen, you know, dollars can only exist on the books of the Fed electronically. Yeah, you have some paper dollars that people could maybe take out of the country and stick under their mattress, but that's a fractional, tiny amount of dollars compared to the total global dollar supply, which is basically what the debt is, 37 trillion. Those are dollars held in the form of treasury securities. So basically, when you're saying we're going to take dollars from someone, and then we're gonna pay a treasury, all you're doing is exchanging dollars in one form for dollars in another form. You're eliminating the treasury, which is a dollar deposit in a securities account at the Fed, and you're just replacing that with a dollar deposit in a reserve account. So, I mean, the whole thing is nonsense if you understand that those treasuries, the 36 trillion in treasuries, those are just dollars held in a different form. They're in the form of a security with an interest payment attached. And so, like, this whole idea of we're going to take $5 million from people and we're going to extinguish the debt is basically just taking dollars from one pocket and sticking it into another pocket. Nothing really changes. And it's mind-blowing and ridiculous and bizarre that we're spending so much time on this and having to come up with all these cockamamie machinations to deal with this when there is not an issue. You're taking dollars from here and you're just putting dollars over here. It's the same thing. You're not getting rid of anything. The dollars held in treasuries, yeah, they're held in a slightly different form, just like if you have money in your savings account in your bank. Let's say you have $1,000 in your checking account and you have $1,000 in your savings account, all right? And you want to move that savings account to the checking account. The bank just debits the savings account and puts it in the checking account. Nothing has changed. You still have $2,000. You had $1,000 in your savings account. You had $1,000 in your checking account. Now the savings account is extinguished, and you got $2,000 in your checking account. That is they're talking about something that is, number one, so easy to, well, maybe it's not easy to understand because most people don't understand it. And I think most people don't understand it is because it's constantly, pounded into your head into their heads that this is a debt and it's going to explode and it's going to cause doomsday and it's going to be the end of the world and it's going to crush everything and it's going to reduce our standard of living to zero, negative. We're going to be crawling on our bellies like worms. It's not true. The other thing I find very funny, actually, is that the House just passed a bill that's going to the Senate. This is the spending bill that has a $4 trillion increase in the debt, okay, to $40 trillion. And then it's supposedly going to increase to $56 trillion in 10 years. Now, I love this. And I'll tell you why I love this. It's because it's going to blow the debt phobes' minds. It's going to blow their minds because nothing is going to happen when it goes to 40 trillion and nothing is going to happen when it goes to 56 trillion. And all along the way, they're going to be losing their shit because, oh my God, like I've been in this business for over 40 years, and ever since I started, they've been talking about the debt, the debt, the debt. It went from 800 billion under Reagan, then it got into the trillions, then it was like with Obama or Bush, I don't know, 10 trillion, then it was 20 trillion, now it's 36 trillion, now it's going to go to 40 trillion. Has the world ended? I mean, seriously. This is something that is so stupid. And so you're taking money from here, you're putting it over here, and they do not understand this. It's the same thing. It's an accounting thing. We're going to debit this and we're going to credit this. We're going to reduce your savings account to zero, but we're going to transfer it into your checking account. Now you're going to have 2,000. You got 1,000 in your checking account. You got 1,000 in your savings account. You tell the bank, get rid of that 1,000 in the savings account, which you somehow think that's a debt, okay? And then you put it into your checking account. You still got $2,000. Nothing has changed. That 36 trillion, okay? If you eliminate those treasuries, pay off the debt, you eliminate those treasuries, the 36 trillion still exists in the world if you did that by paying it off. Now, there's another way they could do that. The government could tax away the whole 36 trillion. Then we're fucked. I mean, then the whole world is fucked and we're up shit's creek. All right? So, like, this whole thing that's going on, like, we got to get people, and we don't even know who these people are. We don't even know if we want them. Trump is just saying, like, they must be good because if they have $5 million, they must be good. They're going to create jobs. I don't know. I mean, there's bad people who have lots of money too. So we're going to take your $5 million and we're going to switch it from the savings account to the checking account. It's the same thing. No, it's an accounting gimmick, and they don't get it. They're talking about this, not Trump necessarily, because he's had this idea pushed on him by freaking Lutnick and Besant, these two geniuses, okay? So like, yeah, that's a great idea. We'll get rich people from outside. The dollars are all here. They can't exist anywhere else. Paper dollars can, but again, that's a tiny, tiny fraction of what we're talking about. There's not 36 trillion paper dollars floating around. All dollars exist electronically on the books of the Fed. Can't go anywhere. It's an electronic entry. It's an accounting entry. There's nothing physical about it. I keep saying, like, why are we so upset about basically electrons? They're limitless. So we're going to take the 36 trillion of one kind of a dollar, and we're going to use that to extinguish that other kind of dollar, but nothing has changed. It's still 36 trillion. And to go through all of this bullshit, to try to think that we're smart, hey, we figured something out, which is so incredible, and we're going to solve every goddamn thing. I look at this. This is the stupidest. Oh, one more thing. Probably a lot of you not even listening at this point. You signed off. Maybe I'll leave this for another video. Yeah, I will. All right, that's it for today. Please like and subscribe and go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.